Hi, folks. Is it normal to have a Samsung refrigerator go up $800 in less than a year? That and more after this. Hi, everyone. Thanks for joining us on the Real Estate Investor Show. I am Bill Fairman. This is Jonathan Davis. Wendy is still vacationing. She may or may not have a signal. Obviously, may not is the case because she's not on right now.
Yeah.
I think she's using the old string and cup routine.
Yeah,
she's not coming through. But thanks for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you are interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell. And lastly, don't forget to sign up for Wednesday with Wendy. Wendy gives up 30 minutes per person every Wednesday, except for when she's on vacation, obviously, to talk about real estate matters. I mean, you can talk about other things if you want, but you're wasting your time if you don't. And there's a link to her calendar. She's actually backed up through September, so
it might be early October now.
Yeah, absolutely. So, how's it going?
It's going great. Going great, Bill. How are you doing?
I'm doing good.
Excellent.
I got the sniffles. That's okay. You don't have to get away from me.
Yeah.
I think it's allergies.
That's how it starts.
If I go get tested for allergies, I'll call it COVID. They need the extra amount of people to
numbers.
They need the numbers up so they can scare more of us.
I still love talking about that. The CDC releasing numbers on Florida where they combined multiple days into one. It was like, oh, Florida's highest 3-day average ever. And then Florida Department of Health was like, well, you combined a bunch of days together. So it's interesting. I'm sure it was a mistake.
Yeah, absolutely. We are definitely living in some interesting times. If you're trying to get any work done on your home, it's amazing. And I know we talked about this before with our friend Alistair McDonald, where he lived in Zimbabwe, and they had to pay their employees in the morning and in the afternoon, or they couldn't pay for dinner.
Well, you can't even pay your contractors because they don't even show up.
Well, that's true. I had that same issue here recently.
Yeah.
So let's talk about a little breaking news that's going on, if you don't mind. I mean, obviously, there's a lot of breaking news. We've got the southern border. We've got Afghanistan. What's going on in Afghanistan?
Yep.
We've got the infrastructure bill that is apparently doesn't have a whole lot to do with infrastructure still, even though this first one has a lot more in it about infrastructure than the next one coming up.
Well, I wonder what percentage. If we could break it out in percentages, I don't know what that is. If someone knows. Chat that in. Use our chat box there.
Oh yeah, I forgot to tell you about that. We have a chat on the right or underneath, depending on the.
I'm just curious what that is.
Yeah, well, Scott was just telling us the bill is 2,400 pages long.
Yeah,
and the senators and the Congress people, they're not reading that whole thing. They have staff that reads it for them.
Sure.
So there's going to be things that are going to be missed. I know Scott had mentioned that. Towards the end, there's a thing about cryptocurrency in there that they have to report all transactions to the IRS, because cryptocurrency, although they call it currency, isn't considered currency.
No.
It's an asset.
Yeah, I mean, it has nothing backing it. I mean, it's not currency is backed by something.
Right. So when you buy and sell crypto, it's going to be just like any other stock or solid asset. You're going to have to pay capital gains on it.
Mm-hmm.
And so they're trying to figure out ways to tax everything.
Well, sure.
So keep that in mind if you own any crypto stuff. So unemployment came out today, and it was below expectations. It was like 345,000 claims. They were expecting 365, so it's actually below expectations.
That's good.
And then continuing claims. I mean, we're down 2.6 or 7 million. So those continue to go down, but you're still going to have a lot of people that are sitting on the sidelines, depending on where they are. And then certain industries that didn't really come back from this, you may or may not want to come back. If you're employed in that industry.
Yeah, I mean, that
depends
industry,
on how old you are. If you're close to retirement anyway, right?
Yeah, and the people who are the owners of whatever industry that is the small business. Are they too heavily regulated, or is it too onerous right now to even come back?
No, I know. I really feel sorry for New York, California folks that are in small hospitality businesses, gyms, that type of thing. That I tell you, they're really trying to kill the small business guy down there. Not only that, they're putting on these new mask regulations and mandates and vaccinated and unvaccinated, and they're making the business owners police it.
Yeah.
I mean, first of all, they're not qualified for it.
Yeah.
And they're having a hard time finding enough employees as it is. Now you're going to have to hire somebody else just to be the.
Well, just on that note, so I read I had nothing else better to do. I read the report from the White House of, the back and forth between, it was like Dr. Murphy, Fauci, and then another one I can't remember. It starts with a W. But anyway, I just read the report because I didn't watch it. And what was interesting to me, what I took away from that, again, this is my own opinion, it seemed like they were encouraging people to basically shame others or to basically comply with no question.
Right.
And, my personal belief is, demanded compliance is freedom lost. Yes. I mean, 100%, but that's just my opinion.
I'm glad we're no longer dividing each other. So interest rates have been kind of flat this week.
Yeah,
hadn't changed much. I think 30-year is 2.8 something.
Mm-hmm. Yep.
15 is in the what? 2.
It's low twos. It's like 2.25.
So nothing's changed there. Mortgage applications are still down.
Mm-hmm.
Those people that have refinanced have already refinanced.
And inventory still down.
And the applications for purchase are down. It's only because of lack of inventory.
Well, and lack of, we talked about this last time, but lack of inventory, but also lack of qualified people or qualified applicants to afford those homes, like being priced out of a home. Like, I can't remember if I shared this last week or not. I thought I did about Zillow offering my neighbor over $50,000 more than what they would have listed it for with an agent. Like, people are just getting priced out of homes.
Yeah, I think the FHFA has decided to allow rental histories as part of the qualifying for Freddie Loans in the automated underwriting, which apparently they didn't. If it wasn't on the credit, it wasn't figured in as part of the.
Yeah.
Now, you still had to get a verification of rent to show that you were paying on time, but they have an algorithm in a computer when they underwrite you.
To get their DTI. Yeah.
Right. And now it's going to be included in that, which they didn't include before. That's something to keep an eye on with the rental history with the people that weren't paying rent during COVID, and the landlords are saying, hey, no, they didn't pay me squat.
Yeah.
How's that going to affect them now? It might be an incentive to make sure that they get their rent paid on time. Oil prices are dropping. It's down to $63 a barrel, and earlier in the week it was still in $67, $68 a barrel. So I think that's a little more of a reflection on how the economy is kind of slowing up a little bit when you look at the consumer numbers, the January or July sales and August. Well, they haven't got the August sales yet, but July sales were down a little bit.
Yeah.
The good news is big business, industrial sales, and CapEx spending on businesses are still going pretty high. So the consumer is holding back a little bit, but businesses are spending money
anticipating
because they're assuming there's going to be some growth. And then we've got, the obvious supply chain issues that are going to be worked out at some point.
I mean, that's honest. That came up today when I was chatting with a potential equity deal that we were doing. I mean, it's a new construction, and that was the whole, core focus of the conversation was supply chain issues, overruns on costs, overruns on time, what would be the, potential of capital calls, et cetera, of going on that, because that's the number one focus right now is supply chain and costs.
Yeah. So last week we did a little walk around Rock Hill, and we have a builder that is building a couple of homes here right now. One of them is one that we financed and is a spec home.
Yeah.
And the other one is already sold.
Yep. Sold for $339.
And I'm talking about the new construction.
Oh, the new one. That's okay.
It was pre-sold, and we're assuming the borrower got the financing for it. So here's the deal. If the borrower has gotten the financing for it, and I wonder what his contract was like. We need to talk to him about that.
Yeah.
Did he leave it kind of open-ended on what the prices are going to be? You're giving him a price.
Yeah.
Is it you're going to be able to hit that target by the time you finish the house?
Yeah.
If it's not pre-sold like the house we're doing, he can sell it for whatever he wants when he finishes.
Sure.
Based on what it cost him. But if you've made a commitment to somebody, is there something in that contract that says
you would have to have the materials?
And then how does the bank do that? They have to make sure they got enough money in their own account.
Yeah, I mean, and what's your contingency budget? Most people don't go over 5% on the contingency, and honestly, 2 or 3 is pretty typical.
Yeah. On
contingencies, just extra cash that you keep in the account just for overruns.
Well, as we know, things are a lot more expensive.
I know it's like a tract home builder is actually in Savannah. They're building new homes, and basically they were changing the price by, I think it was $5,000 or $10,000 every month. So if you got in July, at X price, the next month would be $10,000 more, and they have a better control over their material costs because it's a community of like 200 homes. They're all tract homes, so even they were increasing the prices by $5,000 to $10,000.
Well, some other things they might start doing too is just giving them a fixed credit for appliances instead of putting them in themselves. Say, here, I'm going to give you, this is the amount I'm spending on appliances. I'll give it to you. You can buy your own.
Yeah.
And then a lot of people would do that because they wanted upgraded appliances anyway, but now they're doing it because, you never know what the appliances are going to cost by the time it's ready to put in the house.
Yeah.
Okay, so that's it for the breaking news. Thanks for hanging in there with our little long-winded breaking news. Let's talk about our ugly question of the day. And so our ugly question is it normal? Is inflation running rampant, or is it normal to see an $800 increase in a refrigerator in just 1 year? Well, we were talking about that a little bit earlier. No, it's not normal. And yes, inflation is, again, we don't know if it's going to be temporary or if it's going to be long-term. Yeah. I know there's inflation because of supply chain issues, but there's also inflation caused by too many dollars chasing too few products. And if we have, and it depends on government on what they're going to do. I will tell you this: the Fed has decided to start tapering their purchasing of Treasury, U.S. Treasuries.
Yes.
Which is going to do a couple of things. One of them is going to raise rates because you're actually going to be able to sell bonds at a normal market price instead of having a giant government.
Wouldn't it be interesting if it
agency
didn't raise rates? Wouldn't that be interesting?
Yeah, I don't think that's going to happen, but it'll be more of a market value. Jonathan and I were just talking about this yesterday. There are banks now selling the risk of their short-term loan. So when a regular mortgage company makes a loan, the way they operate their business is the bank will give them a line of credit that lasts for typically 90 days. It's a revolving line of credit. So when they make a batch of Fannie Freddie loans, they have 90 days to sell it to somebody else or to Fannie Freddie.
Yeah.
And if that loan defaults in that 90 days, then, the bank's kind of holding actually it's the mortgage company kind of holding it. They have to buy it back. Correct.
They do have to buy it back.
But at some point, if the mortgage company can't pay it, then the bank is on the hook for it. So they're selling the risk to people
the default risk
to people that are chasing yield. And
I love that you use the word chase, like the phrase chasing yield.
Well, they are.
Because tell what they're paying.
They're paying. They're getting 5%.
Whoa, they are chasing a big whale, a well of a yield there.
Now think about this though: the risk to a defaulting Fannie Mae loan. Remember, Jonathan was just talking about how much harder it is to get a Fannie Mae loan. The credit scores are higher, the debt to income ratios are much lower. So it's harder and harder to qualify for one of these loans. The chances that you're going to default in the first 90 days are minuscule.
You would think so.
Don't you think?
Yeah.
But there was a bank out of Texas, I believe it was. They sold $275 million worth of these default risks. And they're getting paid a 5% return for this. So
I get it.
Again, we were joking that even junk bonds now are returning 4 and 5% in yield.
That's true.
When it used to, back in the day, you were getting the way in double digits on junk bonds because again, there's a reason they call it junk.
They're really good. It's really good.
That's a pretty high risk. Well, Randy Vetter sent me this article this morning, which I think works out really well with what we're talking about in the housing market. And we're talking about the lack of supply, the inflation that we don't know if it's going to, well, it will end, but we don't know when and how high it'll get. And then we have this extra. And the article is entitled Bubble Talk. So this fella, Ben Winnick of the Business Insider, had this article, and it was basically 3 reasons why we're approaching housing bubble in the U.S.
And just so when everyone here watching, so when you say a housing bubble, what is the occurrence of that? Because I know everyone's mind goes to 2008.
Well, that's what they constantly compare it to, and that'll be in here. So, reason number 1: prices are above the bubble levels. Case-Shiller Index has exceeded the heights of the late 2000s boom. Now, I did go back and read the article to make sure, because the first thing I thought of was, is this inflation adjusted?
Yeah.
Because sure, it's going to be higher than the 2000s. Stuff goes up in price.
Yeah.
Now, to me, even with inflation adjusted, if we're just now a little bit over top of the original bubble numbers, that's still well within normal appreciation over time. So I kind of discount the prices if you're comparing them to 2006.
Yeah, I mean, and the reason for them is a much different factor than if you compare them to that 2006.
Exactly. And we'll get to that in a minute. But we know speculation, lack of inventory.
Yeah.
So houses are selling with bubble intensity.
Bubble intensity. Wow.
So beyond the price growth, the ferocity of which homes are selling is possibly the wildest on record.
So beyond price, the ferocity of it, man. And then you have to ask why and where.
Yeah.
More importantly, who?
Yeah, if we break these numbers down, everything, and again, they're using national averages.
Sure.
So we know that in places where people, and I showed you that migration chart last week.
Yeah.
Places where people are moving out of aren't going to have the same intensity of places where people are moving to.
Mm-hmm.
Again, we go back to inventory issues, right? And
100%.
we also have to worry about, a fear of missing out thing going on, because you have really low rates.
Yeah.
And you have, am I going to be able to find a house in the area I want to be in? So that's going to help that, right?
Yeah.
And then the third one, rents are spiking higher. Nationwide, the price to rent ratio rose just above 1.5 in 2006, and they sat at 1.45 in May of this year. I don't know what the hell that means, frankly. I should have gone back and read the numbers. But why would you think rents are going up?
Because they're being controlled by large firms that have mass portfolios of rentals.
That's one.
Yeah.
Another reason rents are going up is because it costs more for the houses now.
Well,
So if you're paying more for the house,
it
you
costs
have
more
to raise the rent.
It costs more to buy the house. It costs more to build the house.
It costs more to maintain the home. It costs more for
Sure.
your property managers.
Well, and you better believe that every municipality reassess those property taxes.
That's right, because the values of the homes have gone up.
Yeah.
All the municipalities. Listen, I live in Union County. They voted to raise property taxes there as well.
It's almost like that, like municipality forced gentrification. Like I've seen so many wholesalers with deals, and they've got it from people who can't afford their taxes on their homes anymore, because the taxes in some cases went up close to $1,000 in a year, and people are just selling it because they're like, well, I can't afford to live here anymore. So
Yeah,
that's interesting.
Now they did go. This article was presented in Roofstock newsletter. So they had their own commentary. And this is what was later discussed in the article, is that the credit worthiness of the mortgage borrower and lending standards are significantly different from 2006. Further, the pandemic exacerbated supply chains, created pent-up demand for different housing types, meaning most people were moving out of multifamily in the single family because they didn't want to be stuck up against somebody else that had the disease.
Mm-hmm.
And it also allowed them to move further away from their jobs as well. Taking a look at mortgage debt as a percentage of disposable income, we are at all-time lows. So people are saving money. They're not going to get into the same financial situation they were in.
Like we said
previously.
before, the reason for the pricing increase is completely different than it was in 2006. So I haven't read this article, but I would disagree that there is an imminent bubble coming.
Well, I think a lot of times people do these bubble things just so they can get somebody to click on the headline.
I mean, I've been reading about housing bubbles since 2016.
Yeah.
so I mean, it's and 2016 is nothing like it was or like it is now.
And then part of the argument against is that current Redfin data points to a cooling of the housing market as the share of homes for sale increasing for the past 3 months to 4.9%, which is good. There's more houses coming on the market now, more houses being listed. They're staying on the market a little bit longer, 17 days, which is, I have to laugh. That's a long time to be on the market, 17 days.
Half a month, man. I was sweating it for those 17 days if your house didn't sell.
And then the percentage of houses in May selling for less
than list price,
less of a premium above the listing price is starting to go down. But listen, that's going to happen. You're going to have when you have supply and demand issues, when there's not enough supply, people are going to be willing to pay more. And there's going to be a frenzy to purchase. As people start saying, all right, well, this is not really the market for me to buy in. I'm just going to continue to rent.
Yeah.
Then houses are going to stay on the market a little bit longer. Those folks start to panic a little bit and they start dropping their prices. And you have to let market forces do their job.
That's right. I'm just tired of people who are like, housing prices are higher than they were in 2006. We've got to be in a bubble. It's like, well, of course, housing price. That's why we invest in houses, because they go up over time.
Yeah. Well, you have to have shelter.
Yeah.
You have to have food and shelter.
Yeah.
Now, as part of this, and if you're not getting part of these roof stock newsletters, you need to sign up for their stuff anyway. They've got some good information in there. Whether you're buying homes with them or not, they do give you some good information.
Well, what do you think? Do you think that we're heading into a bubble? You don't?
My short answer, no.
Yeah. Man, I was hoping we were going to disagree on that.
No. Now, let's talk about real quickly, because our next show that we have coming up at 1:00, we're going to have Jim Sheils on. He does build to rent. And there's a link to our next show. He's a great guy. He has a build to rent operation in Jacksonville, Florida. He's got actually he's all over Florida now, but he is based out of Jacksonville. And there's also a small landlord update in here, and they're getting their teeth kicked in with these rent moratoriums that's been going on. And oh, by the way, Supreme Court found that it is unconstitutional for the CDC to extend a rent moratorium, that they have to have Congress do it, not the CDC. They don't have the authority, which
who would have thought?
We already all knew that.
Who would have thought that?
But of course, the administration is appealing, and by the time all this gets through the courts, that extension date will have expired, so it doesn't really matter. But the problem is the small landlord. More than 50% of the residential rental market is people that own fewer than 10 units.
Yeah.
And a lot of these people that did it for their retirement, very few, you can't make a living off of 10 units of rental. So it's a supplement for your current income, or they're doing this for their future retirement.
Yeah, it's a retirement strategy for most people. Yeah.
And so you've had all these people that are not getting their rents, and if they have mortgages on it, they're either defaulting on their own mortgages for these homes, or they're taking the money out of their pocket to make sure that it gets paid. And then, so what's going to end up happening? We're going to end up with more inventory on the market at some point. And based on this small landlord update,
I think
we're seeing a lot more people sell their
I think every
homes.
landlord that loses a home through foreclosure because of a tenant not paying through a government incentivized program should collectively get together and sue the government. I mean,
it says here that
as of
February 2021, almost a quarter of these mom and pop landlords, and again, these are people that own fewer than 10 properties. Where was that? Yeah. Almost a quarter of these mom and pop landlords have sold their property since February.
And who bought them?
Well, typically it's going to be your big portfolio.
Your big portfolio. Yeah, exactly. It's almost, and you start connecting dots, it gets a little, you can go down rabbit trails, I suppose.
And why are these big companies in the housing business? Because they don't want to make 5% on risk defaults.
Yeah, they don't want to make 5%. And why are they willing to overpay by $50,000? Because they know that the future is in housing.
Yep. Single family housing, to be exact. All right, folks. Thank you so much. I hope this information was helpful to you. And
if it wasn't, direct all your emails to Bill.
Thanks again for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. And don't forget to like, share, subscribe. Where's our bell?
I got to
We
get
still
one, hit
haven't
the
got
bell.
one. And don't forget to sign up for Wednesday with Wendy. Again, we have a link in the chat for her calendar. She donates 1 day a week to help others. So get on the schedule. All right, guys, it was a pleasure. We shall talk to you soon. Don't forget about our 1 o'clock show with Jim. He's a great guy. He's got great information. Take care.